Most people think the gaming hardware market is just about RGB lights and clicking sounds. It's not. It's a high-stakes chess game played with billions of dollars. Today we're putting Corsair and Turtle Beach under the microscope. This isn't just a corporate update. It's a survival guide for the year 2026. Here's the hook. The gaming world just hit a $1.8 billion rebound. That's enough money to buy a literal private island for every developer at Blizzard. But here's the twist. One of these companies is 4 times the size of the other. Corsair is the neighborhood bully, while Turtle Beach is the specialist scout. The question is, in a shifting market, is it better to be a giant or a ninja? But wait, there's a hole in the pocket the size of a crater. It's called the 2026 Tariff Cliff. Imagine you're buying a pizza, and suddenly the government says, that'll be an extra 10% just because the dough came from overseas. That is exactly what's happening to these guys. Since 90% of their gear is made in Asia, this isn't just a tax. It's a heart attack for their profit margins. So we have to ask, does being big protect you, or does it just make you a bigger target? We're looking at muscle versus agility. Corsair has the scale, but Turtle Beach makes more money per person. Let's find out who actually brings home the steak, and who's just left with the crumbs. Think of Corsair like a walled garden. Once you buy their keyboard, you want the mouse, the fans, and the memory just to keep the lights synced. It's a trap, a beautiful, glowing trap. Turtle Beach, they own the shelf at your local Best Buy. They are the impulse buy you make when you realize your headset just broke. 2 different paths, one goal, total dominance. Look at this bar chart. Corsair's revenue is a skyscraper. Turtle Beach is a 2-story house. In the world of business, size gives you bullying power. Corsair can walk into a factory in Asia and demand the best prices because they're buying millions of parts. Turtle Beach, they have to be a lot more polite. But here's the wow factor. Turtle Beach is running a lean, mean machine. They generate $1.1 million for every single employee they have. That's nearly double what Corsair does. It's like comparing a heavy tank to a Tesla. One uses raw power, the other uses high-tech efficiency. Let's talk about how much we actually keep. Corsair makes a ton of money selling PC parts, but the profit there is thin, like a single sheet of paper. Their real money is in headsets. Turtle Beach, on the other hand, is an audio specialist. Their profit per headset is elite. They aren't trying to sell you everything, they're just selling you the expensive stuff. Every company has a cash cow, the boring stuff that pays the bills. For Corsair, it's memory and power supplies. It's the rice and beans of the business. But their stars? That's Elgato and streaming gear. That's the future. Turtle Beach is betting everything on their stars, the new controllers, and the next Nintendo Switch cycle. Corsair is doing something sneaky and brilliant. They are moving away from just quote gaming and into AI. They want to build the workstations that run your local AI models. Why? Because gamers are fickle. But AI developers have deep pockets, and they need the best cooling money can buy. Meanwhile, Turtle Beach is doubling down on the living room. By buying PDP, they now own the controllers you use for Xbox and PlayStation. When the Switch 2 feet finally drops, Turtle Beach will be waiting at the checkout line with a headset and a controller ready to go. Now, for the serious part. The home inventory. Both companies are heavily tied to Greater China. In this industry, you can't just move a factory overnight. It's like trying to move a mountain with a spoon. If trade tensions rise, Turtle Beach is actually more exposed because they don't have the massive logistics team that Corsair has. Time for some cold humor. Turtle Beach's internal audits are currently, let's say, a bit of a mess. They got a negative opinion on their tech controls. It's like having a high-tech security system but leaving the front door unlocked. Corsair isn't perfect either. They're mostly owned by a private equity firm, which means the bosses might care more about their exit than the long-term product. We are looking at a 150-day shock starting in February 2026. If you haven't filled your warehouse with cheap inventory by then, you're in trouble. This is the ultimate test of management. Who has the foresight to buy ahead of the taxman? Look at this map. Corsair is the big blue bubble, dominance through scale. Turtle Beach is the higher, smaller bubble, efficiency through focus. Corsair is playing to win the whole world. Turtle Beach is playing to win the elite gamer's wallet. Both are valid, but only one can survive a 10% price hike. Here is the game plan. Q4 this year is the great stock up. Early next year is the price hike. By mid-2026, we'll see if Corsair's AI bet pays off, and if Turtle Beach can ride the Nintendo wave. This is a marathon, not a sprint. My final takeaway? In 2026, the market won't care how much you sold, it will care how much you kept. Corsair needs to protect its borders. Turtle Beach needs to fix its house. It's gonna be a wild ride. Knowledge is power, but deep data is profit. If you want the full-page audit on these companies, email us at sales@hdinresearch.com. Don't just watch the market, own it. I'm with HDIN Research, and I'll see you in the next analysis.